How important is it to have Jamie Dimon back full steam after his illness?
He's the leader of that place.
I think he really is. I mean, it really makes a difference.
So, I mean, him not being healthy, I mean, anybody trying to confront that serious an illness, one obviously gets concerned. But to have him back feeling better is huge for that place, not only for his leadership ability, but just from a morale point of view.
Eric, you know the details of JPMorgan better than I do. How many lawyers develop a $1 billion expense? Do you know, seriously, do you know in-house and out-house how many they retain?
I do not know.
Bill?
Well, it sounds like a how many people does it take to put in a light bulb kind of joke, but they have a lot of lawyers, I promised you that.
Well, but remember, expense also accounts for what you set aside. I mean, it's not just paying legal fees.
No, they're setting aside $1 billion.
They're setting aside
legal expenses.
Yeah.
And this is an important topic because for all of the pain that J.P. Morgan and other banks have suffered settling with the Justice Department and other regulators over alleged infractions in the sales of mortgage-backed securities, alleged, of course, but probable, given everything that we've seen and learned, we have yet to enter the phase of negotiation and settlement over the fixing of LIBOR, the fixing of foreign exchange rates, the fixing of gold,
we've just done
and
the
other
mortgage
market
bonds.
benchmarks. That's about to begin.
Yeah, right.
Now, I think you can draw the conclusion based on what J.P. Morgan is doing this morning that we're not there yet. Because if we were, it's probable, likely, that number would be higher.
So we're going to see a lot more quarters of kitchen sink quarters where everything's thrown in. They have to account for everything.
It's not clear yet how culpable J.P. Morgan individually is relative to the other banks, British banks, German banks, Swiss banks. But J.P. Morgan is among those that contributed LIBOR rates, for example. It's certainly a very active player in foreign exchange, cited this morning foreign exchange in emerging markets as being the driving factor behind the small increase in fixed income trading revenue. It's among the biggest banks in the world and has a very large hand in almost every financial market globally.
Gold and silver.
Sure.
One of the biggest players in the silver market. So there's no question they're going to be involved in those.
All right, here's the thing. If you have only 2% growth on fixed income trading, which has traditionally been a big profit area for J.P. Morgan, do you have layoffs?
I mean, layoffs. Yes, there's always layoffs on Wall Street. And you would think that they would reduce compensation for these people who aren't performing, and that's probably going to come too. Compensation is down across the board on Wall Street, still higher than they could get doing almost anything else. And then there, you know, as we saw with Deutsche Bank, you know, if you don't conform to their new policies about behavior, those people will leave the bank. And the head of investment banking at Deutsche Bank said yesterday, we welcome their departure. So, you know, lots of change going on Wall Street now.
Goldman Sachs is probably leading the industry as far as rationalizing and automating as much as possible. Remember, the banks, J.P. Morgan, Goldman Sachs, and others complain about the fact that the capital requirements that regulators around the world have imposed upon them make it very difficult to make markets. If you can't make markets, you don't need people, right? You become much more of a flow business.
Yes.
Flow requires fewer folks. People. The equitization of FIC, as they say, the sort of the automation, the computerization of the fixed income trading business is happening. And if that's the future, there's no question you'll need fewer people and you won't have to pay them as much.
Yeah, but the future's Henry Kaufman talking years ago about a utility bank. Are we back to manufacturers Hanover and Chemical Bank before they made it?
They would love to be Manny Hanny or Chemical Bank because those banks
can they
actually
be both?
made
But Bill,
real money. Look at the anemic
Bill,
returns.
the money question is, can they be both?
Look, I mean, we're not back to days where somebody like J.P. Morgan Chase is Manny Hanny or Chemical, right? Even though that's part of their DNA. They will do lending, yes, but they do so many other things. I have said before, Tom, and I believe on this show, we are going to be entering, we have entered a new golden age on Wall Street for these firms. You know, it's not going to be the same that it has been. Maybe you don't make as much money if you're a trader or a banker. But these firms are going to start minting money again as the economy improves.
If J.P. Morgan gets Sterling Cooper Draper to be their ad agency, I think it could really work. It could be like a 60s thing.
But what you're talking about when you say a golden age is simply just benefiting on the fact that GDP is recovering. It's an economy. It's not like Wall Street.
And there's less. Well, there's no competition anymore. Excuse me.
Fewer players.
Fewer players.
Right.
You know, global reach. You know, where are you going to go if you want a corporate loan these days?
Except somebody has to start charging more, and that hasn't happened yet.
You mean
right?
among the
Because the
banks?
demand isn't there. If you look at the future, right, there's no revenue growth. If you look at the analysts' expectations...
But there will be, Eric, as the economy improves.
Well, and that's the underlying assumption, that the economy improves, that there's demand, and the pricing power returns to the banks, such that they can actually charge more for these high-value services.
They are a cartel, so when you're a cartel, you can charge more for your services. My word, not theirs. I think they're going to have a lot of pricing power soon.
Eric, you're going to be listening in on the conference calls.
Yes.
What are you going to be listening for?
Super important today for a couple of reasons. In the case of JPMorgan, everybody wants to hear from Dimon. He was at the International Institute of Finance conference in Washington over the course of the weekend, talked about having to spend much more on technology given the data breach that they suffered. But more importantly, the trading environment, the extraordinary volatility that we've seen over the past few days. The banks may not be as big in trading as they used to be because of these capital requirements, but they still see a lot. Everybody listening to JPMorgan, Citigroup in particular.
And what it says for the rest of the industry.